Midterms, CPI, and leptokurtosis is the focus of our outlook this week. My name is Josh with Trade with Profile, and this is our weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. Last week, it was all about non-farm payrolls and FOMC decision. Again, the Fed decided to raise another 75 basis points, but this week, it's going to be about midterm elections on Tuesday, the next CPI, and this idea of leptokurtosis. We're going to talk about that and what that means and how that can impact you as we get ready to look for intraday opportunities in the ES, NASDAQ, Russell, and crude. So with that, let's jump in, shall we? And the first place that we like to start is just kind of by getting a little bit of a macro perspective. Macro meaning, what are we looking at, and what's kind of driving where we are. And so the first place that we're going to look here is just kind of look at where the S&P is. We're looking at ES Futures here relative to the last 4 CPI readings. That is right now, because the inflation is the story that's driving everything. That continues to be the big number that we're looking for. We had FOMC last week. Of course, the movement off of that was pretty good, but really we're looking for CPI. So, where are we as we come into this? So let's look at a couple of things here. We've got the July CPI number back here. We have the August CPI number here. We have the September CPI number here, and we had the October, September. So we're really in and continue to be in a large range that has been impacted by what's happening in, from the inflation story. That really is the story. All expectations right now are that we're going to see peak inflation in the next month or two. Okay. Now, that doesn't mean that we go back into a deflationary status. It just means that we're peaking out at inflation, right? And the whole story has the Fed done enough to be able to pull back on what they're doing? Well, while this is going on, we're seeing some really interesting things happening in terms of how participants are positioning themselves. And probably the best place to see that is in the VIX curve here. And so we want to look at this in a couple different ways. We have the S&P price action here, a couple key references that we're looking at. The current 2022 low, the pre-COVID high, 3,900, pretty significant price reference. And then 2 different ways to look at the VIX curve. So this one is what we call a combined curve. So we're looking at the relationship between 9-day VIX versus 30-day VIX and 9-day VIX versus 1 year. Why would we look at that? Well, when participants are looking to hedge, they're going to go into near-dated options first. Why? Because there's the least number of outcomes that are priced into the premium that they pay. So if you need really quick insurance, you're going to go to short-dated stuff, not long-dated stuff, what has a whole bunch of CPIs in it, right? If you're buying a year out of puts, you're paying for the CPI readings for a year. You buy it for Friday, you're paying it for 1 CPI, right? So that it can make it a little bit cheaper. You get more bang for the buck. And we're seeing this. We're seeing lots of participants jump in to short dated options. And that's creating a little bit of an interesting thing happening here in the curve. Specifically, we've got in the short term, so this up here breaks out what we call the short-term curve and the long-term curve. So short-term curve is going to be 9-day versus 30 days. So the VIX 9-day versus the VIX, which itself is 30 days. And then we're going to look at the 9-day versus the 1 year. And when they're inverted, when they're above this parity line, that's typically an indication that we've got participants that are hedged up. Okay, so they are hedged up in a short-term perspective. In a more long-term perspective, they're not. What does that mean? What does that translate? It means that we can continue to see really wide, sweeping, volatile ranges, and that we can see people rushing into these things very quickly. It also means that when we look at the longer-term curve, it's not quite as clear into kind of what we're going to get. How is that helpful? Well, when we went into the last CPI reading, the combined curve was pretty inverted, meaning that we were fairly hedged across the spectrum. Coming into this reading, where are we? We're kind of in the middle. We are pretty concerned in a very, very short-term basis, not as concerned in a long-term basis. So that means that we have less insight into which direction will we run. We're going to have to be more reactionary to it. We could certainly become more inverted in the near term as the longer-term curve catches up. If we get to either full complacency or full inversion across the spectrum by the time we get to CPI, that'll be more insightful. But until then, just know as we come into this week, it could be kind of murky. Okay, so that plus the midterms that's coming on is the clue, and the leptokurtosis. So leptokurtosis is where, if I'm looking at a distribution, so like let's imagine this is a distribution of price. Typical number of samples is going to give me a nice bell curve, okay, with the mean. A leptokurtosis is where everybody's concentrated into a very short area of the curve. Seeing that the near-term curve is inverted while everything else is not is telling us that we're really, really concentrated in this period. So how could that play out? If everyone is into that on Thursday and the inflation number comes out as expected or better, then no one will buy additional puts, and we will violently rally as those expire into Friday. Okay, so that is the leptokurtosis as we go into midterms and CPI on Thursday. That's kind of the macro perspective that we're looking at. So let's look at some other things on the calendar, just a couple of those that we've talked about so far that are going to give us some insight into what we're looking for in the week ahead. And here is the calendar. We're still in earnings season, but that's not really the thing that's driving things because we're past all the big tech earnings. It's really now more to like macroeconomic things. We do have the CPI reading from China on Tuesday. That'll be overnight. Can kind of watch that. FOMC speaker on Monday. Not a big deal. It's after the close. Wednesday, we have a couple things. We have EIA for crude oil, so we'll be watching that. We do have Williams speaking pre-market, way pre-market, so he must be in Europe at a policy meeting. We've got WASDE for grains. We'll talk about that when we talk about ideas, and we got a 10-year note auction. And then on Thursday, we have the core CPI. Okay, so now it's not listed here on the calendar, but again, Tuesday we do have midterms. One of the questions will be, will the Republicans gain ground, and how much will they? Will they take over the House? Will they take over the Senate? Will they take over both? Okay, that is likely to provoke a reaction. So watch for some type of reaction Tuesday night into Wednesday morning, and then we'll see how people position themselves relative to their hedging as that goes on. Typically, a midterm election, when we've had full control of Congress by one party, we go to the other side. That's typical. So we'll see if that's what indeed holds. We do have some additional Fed speakers. I'm always watching to see if I have Fed speakers that are speaking during the session. I want to be careful of those, especially near the open. Not really a whole lot. Then we've got Michigan consumer expectations on Friday, right after B period. So we'll be paying attention to that. So again, biggest things on the calendar are going to be midterms on Tuesday, CPI on Thursday, EIA for crude oil on Wednesday, and then the WASDE report. So if you're looking at soybeans, corn, and grains, you'll be looking at the WASDE report on Wednesday. Okay, so that gives us kind of a broad perspective of what's happening. Let's now start talking about specific products. And we're going to start by looking at the ES and the S&P E-mini futures. And here we are. Okay, so like last week, we came into the week with fairly strong auction. We were expecting to go up to 39.60, at least maybe 4K in the ES. And instead, we had a lot of weakness. All of the running into chasing on Friday really failed. And so that has taken us back to the middle of a range, and in fact, back to the middle of two different ranges. We had talked about this range here, and then there was the 3,600 to 3,800, and you can see that we've come back into and closed inside of that 3,800 range. A significant reference is going to be 3,690, so that's going to be an early downside reference here. If we can get back above monthly VWAP, I think there's an opportunity to push again back in this direction and try to recover, but it's definitely kicked us back down in the middle. Looking at the weekly chart here, we'll just kind of adjust this. While we did not get to our weekly target, we got some insight in terms of like what were we trying to defend, and we were really trying to defend. We said, hey, we're looking for 39.60 up here, so long as we stay above this prior weekly VPOC. Notice how the auction, now this is all FOMC here, but notice that once they settled below the last week's VPOC, that opened the door to push toward last month's VWAP and back towards that 36.90. All right, so now as we look at last week's profile, there's really kind of two distributions. right? And depending on which one that we spend time in, that will give us kind of a perspective on the bias. And you can see that the month-to-date VWAP is right in the middle. So if we're below month-to-date VWAP, looking for 3690 and lower, back towards 3600, in fact. If we're above that, then we'll look back up towards the 20-day, back up to last week's VPOC. And if post-CPI, we're above this price, no reason that we can't make new monthly highs and ultimately get to that 3960. That's still in play. All right. So, but right now we've got an auction with a pretty poor low, and we're in this lower distribution. So holding this lower distribution, look for lower prices to 3690. Now at 3690, I'd watch for some responsive activity to push back up in this direction. Or if we rally up first and then come this way, then we're going to target 3690. The whole auction process is really a movement from value reference to value reference, prior inventory reference to prior inventory reference. So a lot of the direction of like what's the scenario depends on when do we get to that price. Do we come to it early? We can get responsive reaction. Do we come to it late? That becomes a target. Okay, so that's kind of what we're looking for in the ES. Now, on the close on Friday, as far as we're talking about different scenarios and references here. Let's get this up to, just to give us a little bit of perspective on what's happening. From a 5-day basis, value is still higher. Now, this is the FOMC range. There was follow through on Thursday. They were not completely able to get into the gap. Friday, off of non-farm payrolls, we had a neutral center day. So we took IB high, IB low, but value area is higher. Watch for the auction to be able to hold above 3780 and push toward 3850. That would be called responsive activity. Why do we call it responsive activity? Because until we get back through the FOMC inciting auction behavior, that still controls the auction. Okay, so we could if we rally here early in the week, then that's the part that can knock us down. And note that that's also where that month-to-date VWAP is, right? If, however, from Friday we had 2 distributions, if we're in the lower distribution, look for them to take out those lows and push towards 3690, and then try to get back in this direction. We do have, if you're looking over here on the 5-day profile, we've got an area here that's likely to become the 5-day. So that could incur some more rotations in the auction, and we'll just have to kind of see, again, which one do we get to in which direction. So neutral activity on Friday, could easily see some neutral activity on Monday, especially with the midterms coming in. It could be pretty choppy. All right, so just beware of that where we are as we come in to the week. As far as like specific prices that we're looking for within the auction, let's just go over here and pull up the quick sheet. And in terms of ranges, 3880 is expected to be the high. So that, to get to that 3960 would push the expected range. 3678, the low. So get to 3600 would push that range as well. So, if we push out past those early in the week, expect a responsive pull back in. If we hit those prices late in the week, then we can probably push them. All right. So still looking about 144 points. Again, if this is the first time you've watched this, you can download this sheet linked to this video and have this as a reference as the week goes on. This is kind of give us an idea of the initial postures and where we're at. ES is in a bearish posture. So we're looking for that 5-day to migrate lower. The key reference being 3882.80 and 3845 to the upside, looking to pull at least the 5-day lower as the week begins. Okay, so that's kind of what we're looking for in the ES. Let's now jump over here to the NASDAQ and get an idea of what's going on with the Qs. Very similar, to what's happening in the NASDAQ as relates to the ES, but that we are seeing more weakness in the NASDAQ than we are seeing in like the Russell and the ES relative. Why is that? It's because the NASDAQ has components that are much more sensitive to rates than the rest of the S&P 500 and the Russell itself. So the Russell has products that are beneficial relative to increased rates. Those big tech companies, man, yeah, they're struggling and will continue to struggle with higher rates because it just means it's harder for them to finance new capital investment, right? Where are we so far in the NASDAQ? Well, we're back to the CPI range from last month. And we've got a reference here at 10,800. That's going to be the key reference. That's the 5-day is right there. We also in the NASDAQ, we're looking to push up in this direction. We failed below last week's VPOC, and then that rotated us back through. Ended up, for the week, it gave us a pretty good. Let's just go over to the weekly chart here, and zoom up. Not quite an engulfing week, but definitely one that put in. Here's Friday's high. Here's the early high of the week. Definitely ran into these sellers and was rejected again. That got us below that 11,500, the most traded price from last week. And then we broke lower. Push, balance, push. This is all FOMC, acceptance lower. And now where are we? We're in a position where the 5 days here, 20-day up here, 90-day is here. And so we're looking now for continued balance within the profile, but we do have, because the weekly VPOC is here, we have an imbalanced opportunity to the downside. So still expecting some lower prices in the NASDAQ. That means if we open in the range in the week and push higher first, that's an opportunity to be short for new lows later in the week. It also means that if we get early lower prices, that would actually complete the auction, kind of give us a bell curve down here, retest those CPI lows, and then look for the auction to come back toward 10,800 later in the week. Okay, so depending on which one we get to, it drives kind of what we're looking for. As far as expected ranges and things that we're looking for in the week, we've got still about 500 points that we're looking for, 11,239 to the upside, 10,540 to the downside. Let's go look here at the TPO chart and just get a sense of what that's looking at, and even things to think about as we come into Monday. All right, because we do have 10,800. We have 2 days. So we have a very balanced day on Thursday, and then we have a neutral day. IB high, IB low, closed in the middle. That's a neutral center day. That means that there's a lack of directional conviction while accepting these lower prices. It means that we've got a little bit of a range here, and we're looking to see if the auction can move from balance. If it's higher, we've got singles that we can clean up toward the prior weekly VWAP, and up toward 11,250. To the downside, we can test and push towards decision levels lower. Watch 10,800. That's going to be the early key reference to the auction, looking for moves higher or lower from that price. And if the auction is unable to get outside of these ranges, watch for it to kick back to that price. All right, that's the early magnet. That's the one that we're looking for as the week's in play. But definitely, again, more weakness in the NASDAQ. We'll watch that 10,800. Can we get below it and come back above it later in the week? Look for a push to 11,250. If we push higher early and then come down to it, look for it to push for new weekly lows toward the prior CPI lows. Okay, so just a reiteration of kind of the plan. And what I'm looking for is that if we open early, push higher, and then fail, we're going to target these prior lows. That would be kind of scenario one. Given that we were neutral, but the buyers were last, so we could push higher. If we push lower first and get back inside of that weekly's range, we're going to come back to 10,800 and then rally later. Overall, and I hope that you can kind of see this. Overall, what's the NASDAQ, but not within a big range. So we are expecting, when you're in a balance like this, you'd expect to get some kind of responsive activity or support when you hit that bottom, or we just flush, right? So we're going to watch for movement there, and then see if we can hold before we rock and roll from there. All right, let's go on to the Russell and see what's going on in the Ruddy 2000. Again, that one is a product that is doing a little bit better overall relative to the ES and the NASDAQ. And let's just take a look here and see what we're looking at on a monthly basis. We do have new monthly highs, and we're pulling back early in the month. However, note a couple things. The auction pulled back earlier, and then there's some good buying excess right about the spots you'd expect. And in fact, where this buying started from, right around 1750, buyers have defended that. So let's watch at 1750. Failure there is going to take us on down towards the bottom of this range. The Russell is still very much in a balancing range. And you know, there's a couple different balancing ranges here. Oh, let's get rid of that one. There's this one, right, which you can see we tested and rejected out of. So that's why I say if we get inside of that range, look for us to traverse further down. We have this range that we attempted above and failed, got back inside. So above 1850, and we can get that year-to-date VWAP. That was our target last week. We almost got it, and then failure came in, right? Unable to sustain higher. So this is another one of those that, we had the good idea, knew the price that would defend that, and we were unable to sustain it. And so when the auction off of this strength, got follow through into the new week, and then came down, balanced, and then here's a new move that takes us back through that. Buyers don't step in. That was all FOMC, and your key target, that year-to-date VWAP, is off the table. We have to get above 1850 to bring that back in. It could be in play, but more likely than not, unless we can get above monthly and weekly VWAP, we're looking for the Russell to continue in this direction lower. Now, note that the weekly VPOC did not migrate lower. We didn't get enough acceptance lower, so there's two distributions. Which one we're in tells us, are we going higher or are we going lower? Okay, when you have multiple distributions like that, that's how we think about the auction as it goes ahead. Key references that we're looking for, we're expecting about 75 points, 76 points this week. 1857 to the upside, 1751, that's the playground. Bearish posture, be aware, right? That's what we're looking at. Let's finally jump here and take a look at crude oil as kind of the last product that we look for daily opportunities in. And crude was the one that actually played according to plan. I mean, we were looking for follow through higher out of this 88 to 89 area and looking toward the year-to-date VPOC. We got that. It came late in the week after some early balance, but you can see they got up to that key reference and worked out really well. Let's go here, look at the weekly and where we were relative to last week. And this is why it's really why we pay attention to the most traded price. Now I look at the most traded price on a daily basis, and I look at the most traded price on a weekly basis and a monthly basis, just to give us some ideas of grounding. And you can overlay anchored VWAP as another way to look at value development as well. But the prior week, we had bullish imbalance in the profile. You can see that the auction pulled lower early in the week and then came back to that most traded price. Balanced for a bit and then higher. This is pretty typical behavior. If an auction goes away from a balance reference, comes back to that reference, what happened? You just told everybody you can't go that way. So it increases the probability that you'll go the other way, especially if you're unable to attempt and hold lower. And they attempted several times to hold lower, were unable to, and then that brought the big move that got us to the most traded price and the expected price. Now, what about coming into the next week? Well, let's look at the posture, right? 5-day, 20-day down here. Look how thin this is. So early in the week, expect some range-bound trade to try to pull value higher. If we push immediately higher in the auction, I think that's a good opportunity to get short and to fade this. If we move early higher, and the place that we're going to target back to is going to be kind of this node right in here. Why is that? Because as I look at this profile, that's the most likely candidate at the moment for where I could do some balancing and pull some value higher. So sometimes the auction has to come lower to pull value higher. That's the price that we can look at. That's why if you're looking at the volume profile throughout the session, identify those nodes where value might migrate to, where we've done a little bit of business and they stand out from the other ones. And if that's not recognized as a volume point of control, that can become one that can be a destination that the auction migrates to. All right, so that's kind of what we're looking for in crude in the coming week. Also, new monthly highs I think are in play. Do pay attention to the fact that we have this really strong relative volume here. That's now key defense. So, unless we come back to 88, any early pullbacks in the week can be opportunities to be long, to break this and keep pushing toward this selling excess up here, which gets us around the 96.5 area. All right. As far as, weekly and expected highs, that's 97s within the expected range higher. So that's definitely in play. If we go straight up there, look for the auction to eventually try to balance given how thin the auction is here. All right. So that's given us quite a bit to play with in the week ahead. So that takes care of crude oil. Let's now look at some additional ideas that are in focus for the week ahead. And to do that, we're going to go over to here. So we've done this for a couple weeks. We've been tracking kind of some active ideas and some open ideas. And so we're going to update on some of these. But here's some additional current active ideas that we're seeing in the quick sheet that are, of interest. And, based on what do we have coming from a, catalyst, what's happening within the profile. We've had Bitcoin out there for a while and still not seeing what I want to see in Bitcoin just yet. So let's get over here to this chart real quick here. And we're going to pull up Bitcoin. Get us a volume profile. And we're going to go to a 1-day chart here. All right, we can see a lot of movement. You'd be forgiven for looking at a small time frame and thinking that Bitcoin's really moving, but we're really not. I mean, we still remain inside of a very tight range. And the idea again that we're looking for is we're looking for new lows to come back into this range to be long, ultimately up to this high volume node around 3750. I mean, 30K would be target one, but I want to see a capitulation. I want to see like a final puke before we rock and roll. So until that happens, we're on the sidelines with Bitcoin. The next one that is in the ideas that we're looking at this week, so that's Caterpillar. Okay, so let's go and look at the Caterpillar chart, and I'm going to pull up Cat, and what am I seeing? We just reported earnings here. We've had a pretty significant move of late, and so if you isolate this move, you're going to see a profile that's pretty thin. What I'm looking for is what I call an exhaustion straddle. So the idea is that Caterpillar probably has a range right in here that we're going to spend a number of periods of time and maybe a couple weeks, couple months that's already priced into at the money straddle. So the idea is to sell the straddle and let this premium collapse as it has already moved. It's likely going to balance, and so we're going to sell the straddle that way. So that's something I'm looking to put on Monday. The other one that is of interest to me is wheat, and let's look at the wheat chart here. So we're looking at December wheat, and on the quick sheet they are very balanced. We got to go down to a 20-day kind of time frame to really see this. Here's where you can see how balanced wheat is. All right, so we're looking at December wheat, and we're in a range here, and we're looking for the WASDE report to take us one way or the other. Now, to be fair, the December WASDE report is not the same thing as a July WASDE report. Right? It's not going to move the market like those do, just because we're not in planting season and there's not as much concern or question about where we're going. However, look at where we are. We're balanced, right? At $8.47 a bushel. So looking for a move to the edges. Couple different ways you could do this. You could do this with a straddle, buy a call, buy a put into the WASDE and let the thing run. You could also look for a binary second move off of the WASDE report. What I mean by that? I mean, knowing that this is the key reference, watch the WASDE release, watch for an initial move. Let's say the initial move is lower, okay? And then we come back through the scene, then you'd be long up to the other side of balance. All right, so that would be kind of the idea that we're tracking in crude or in soybeans. So that's some open ideas. Let's go back and just kind of look at some open ideas we have. One was Colgate. That was a strangle. I do have that on. That's working well. Still have the 3550 puts, the 10600 puts. Those are all in profit. Probably looking to peel some of those off as we come in. A couple that closed and continued. I did close the iron condor that I had in the NASDAQ. That ended up gaining, from an entry at 264 points to 76 points. So that was pretty good trade. The MU straddle, I did put that on. That one just did not get to the prices we were looking for. We were looking for either $49 or 57. We couldn't quite get there, and that theta burned. Get out of Dodge. Gold, a couple ways you could do that. You could do that with the outright contract. You could do it with the GLD, the at-the-money put spread. That did work. They did come down later to make new weekly lows as we expected. And then, I also closed a double diagonal that I had in Boeing. So that worked out well as well. So ideas, still watching Bitcoin, Caterpillar, wheat. I'm still working all of these. And then that was what we closed last week. So those are some ideas in focus as the week comes ahead, and we'll update those next week. All right. So last thing that we like to do on this session is to talk about a development focus. We are, after all, a development firm looking to develop skill for traders within the auction. And the one that we're going to talk about this week is process makes profit. What do we mean by that? We talk about that a lot, and you'll hear really, really great traders talk about process as something to aim for as opposed to profit. And what does that mean? It means that in the randomness of markets, there's so much that you don't have control over, but you do have control over one key input, and that's you. It's part of the reason why we use the 4 questions. Using the 4 questions to construct a trade is a process. It means that I will not take a trade unless I can answer the 4 questions. What are those 4 questions? What's the opportunity? What am I willing to risk for that opportunity? What would tell me that I'm right? What would tell me that I'm wrong? That is a consistent process that I can apply to every idea that I'm looking to do that can help ultimately lead to profit. Okay? Good process leads to profit. So if you're looking at your results and you're going, man, my results are all over the place, one of the first places to go is to say, okay, well, what's the process? What's pulling me into the trades that I'm taking? Most often, when we go and we look at traders who are looking to express specifically on an intraday basis at what they're getting pulled into, it's most often momentum, most often some significant move in price, and the brain just goes, oh yeah, I got to jump on, right? One form of process could be that you're going to turn off your DOM. If you're looking at a depth of market, you're going to turn that off unless you're at a price that you want to be active. We talk all the time about not every price is actionable, not every time is actionable. So if you're not at a price that you're looking to be active, get rid of the order entry stuff. Put some barriers around yourself that inform good process. Have some questions for you to think about in your process as you go forward. And I just kind of want to go over some of those with you and see if these can be helpful. So first one is, do I have a consistent process? Do I have with respect to how I do my planning or how I do my trades? This video, the prep that I do each week for this video, is a form of my process that I'm sharing with you. I go look at what's happening from a macro perspective. What's happening on the calendar? What are catalysts that I need to think through? Can I put them on? I put them on my calendar so they give me alerts, because I'll forget. Right? So I got alerts that'll say, oh, that guy's going to speak, or, oh, the WASDE report's about to release. Oh, yeah. I need to remind that stuff. Here are the significant key references as we come into the auction as you're looking at an intraday. Okay, yeah, I got that. Here's how much range to expect this week. Okay, that's great. That's all part of my process. And if you've watched this video, you'll notice they're not all too different from other ones that we've done, because the process is consistent and I trust it, which that's really kind of taking us to the second question, and that is, do I trust the efficacy of that process? Does the process that I do each day lead to the results that I'm looking for? And to that end, if I trust my process and I'm not getting the results I'm looking for, why do I trust the efficacy of that process? Just because I have a process doesn't mean that it's an effective one. And we need to have an effective process. So I realize that this is one of the challenges of being a developing trader, specifically in the vacuum of the retail do-it-yourself trading development world, right? I mean, you can watch this video. There are thousands of videos that attempt to do similar things. How do you know which one could actually have stuff to lean on? That creates a bit of a vacuum of difficulty. But the question is not changing. The question is, why do I trust the efficacy of that process? At least spell it out. So that you know, how does my process result in action? I'm going through this process. What actions do I take as a result of it? And then how do I review my process for needed adjustments? We often take time throughout the year to review the process. In fact, FOMC Day, we get 8 of those a year, is a scheduled process review day. It means it's a day that I'm going to choose not to trade, even though the market's open, so that I can review my process. I can look and say, hey, how was I trading from the last FOMC? What was my process since the last time as I approach the auction each day? And then how do I plan to adjust that? An adjustment could be in the form of, when do I do my homework, or when do I do my review of the auction? For me, years ago, I used to do all of my prep pre-market, but I live in Mountain Standard Time, so I don't get a lot of time early in the morning. If I want to meditate, if I want to read or do some other things, I can't have all of my prep be in the morning. So instead, I moved all of my prep to after the market closes the prior day. I got a couple key benefits from this. One, I'm fresh, I'm not in a hurry, and so I can really do the analysis that I want to do as I prep for the next day and build out my scenarios. Two, because I've crafted those scenarios, I have all of the evening to think about them and sleep and have those kind of, be embedded osmotically, so that when I come in the next morning and I can see how we trade overnight, I can eliminate some of the scenarios that I had already prepped for, which even hones what I'm looking for ahead. So maybe for you, even if you're on Eastern Standard Time, or if you're in Europe and you feel like you have all the time in the world to prepare, there is great benefit in giving yourself even a full day to think about your prep for the next day. And that's a way of process that's been very, very effective for me, and allows me to show up unhurried and really excited for the session, because I've had all of this time to think about, what's going to happen. And then I wake up and I go, ooh, which one came out? Like it's like I'm opening Christmas every day. It's so fun. Process gang. So great questions asked about your process. Again, as I mentioned, one of our processes is we do not take a trade ever unless we answer the 4 questions. If you don't know what a 4-question trade is, or how to be a 4-question trader, go to tradewithprofile.com/4 questions to get all of that. Other ways that you can build skill this week, aside from the 4 questions, is you can interact with us on Twitter, tradewithprofile.com, or twitter.com/tradewithprof. On the subject of Twitter, just know I will never send you a direct message encouraging you to do crypto. We've got some spammers out there, and it's always going to be, we just don't do that. We won't DM you unless you DM us. If you would like to schedule an insight session, this is an opportunity for you to just get an audit of your approach, get some feedback on how that's going. If you'd like to do some more structured development, you can do that via a trial of our development pathway. Or if you're looking at a funded trader tryout, you can pair that between our development pathway as well as a funded tryout through Apteros Trading, which is a really great way to do that. 2 platforms that you'll see us use throughout the week on this video and do weekly posts is edgeclear.com and windowtrader.com. 2 great friends in the markets that will be there for you in the same way that we're trying to show up. And then finally, for those of you who are already working through the pathway, and this is the first part of your week, we'll see you in Slack through intraday discussion and our weekly development sessions, and see what opportunities we have based on our daily outlook and the things that we're looking to do. Whew. Okay, gang, that's it. So midterms, CPI, Leptokurtosis, be prepared. What a great year of trading, and I think we got great years ahead as we go towards like 2024 and get through this whole inflation cycle and maybe cyclical inflation, all that kind of stuff. But thanks for watching. Thanks for interacting with us. Hope this has been valuable and giving some insight, and we'll talk to you next week. All right, peace.